Crypto experts aren't quite ready to call the prolonged drop in Bitcoin's price the new crypto winter, but as performance gets close to hypothermic levels, Standard Chartered's digital asset analyst warning that Bitcoin could fall to 50,000 by year end. Okay, 50,000 by year end. Right now, it's at 68,131. The bank backed up that forecast by slashing its price target to 100,000 from 150,000 as a result of worsening macro conditions and investors trading it out for what, gold, whatever, heading for the hills. But one real estate investor is heading full throttle into the frigid winds, buffeting Bitcoin. He's Grant Cardone, the CEO of Cardone Capital, the real estate mogul, crypto investor, and widely followed business influencer, has 5 million Instagram followers, 3 million YouTube subscribers. He is now melding concrete with crypto. We're talking real estate mixed with crypto. Grant, great to have you on the show. I can't tell you, I tweeted out that you were going to be on, and so many of the followers on X that I have were, yay, Grant, can't wait to hear what Grant has to say.
Well, thank you for having me, and I hope the people that follow me, I hope that you didn't get too much heat for having me on your show, because a lot of these old crypto hands are going to say, oh, you know, if Grant Cardone's getting into the game, real estate guy, then it must be the top for Bitcoin, which I don't think it is.
Well, and one of them said, don't throw any softballs at his head, Liz. You know, you got to go right at him. So let's go for it.
Bring it.
There are just a few finite asset classes out there, and real estate and crypto are two of them. How are you mixing the two, and why?
Well, look, I've been buying real estate for 40 years, multifamily real estate, the cash flows, institutional quality, great assets. And, you know, ran across Bitcoin about 13 years ago and looked at the possibility of combining the two, one that's visible, the other that's invisible, one that's very, very liquid, being Bitcoin, almost too liquid sometimes, and the other that's very illiquid, one that cash flows and one that doesn't. So it's like two financial vehicles that are opposites. You know, they say opposites attract, Liz. So we looked at putting these together. I'm not a gambler. I'm a very conservative investor. I like cash flow. I love real estate. But I don't like that real estate is very heavy. It's very slow to move. It's very, very expensive to fix. Bitcoin costs nothing to fix. There's no roofs, no plumbing, no HVAC, no evictions, no property taxes. So we combine the two. We have the largest real estate Bitcoin hybrid in the world. We've done 5 different projects just last year, and I expect to be the largest real estate Bitcoin hybrid that will challenge the old REIT structures.
Well, how does that work? Because, and I see you've got the 10X Space Coast Bitcoin Fund. That combines something like 300 apartments in Melbourne, Florida, with 15 million worth of Bitcoin. You've got a Miami River Fund, similar, South Florida. These are all in Florida, Boca Raton Fund. Tell me, and then you say that you pay out dividends for investors who put in as little as $100. When you say you're melding them, explain what that means.
Well, the $100 is that's not true. That's false. Okay. So we have, like the Bitcoin Melbourne project, we did it was an $88 million project. I bought the asset for $72 million. We added $15 million of Bitcoin to the purchase. It was an $88 million cost to build asset that we stole the asset. So we buy best-in-class institutional quality asset below replacement costs. Rather than just getting cheap real estate, or what we believe is real estate, you know, that's on sale or a discount, we just stack the difference, Liz, with Bitcoin. Rather than just buying cheap real estate, we end up with a great deal on the real estate, add the Bitcoin, we pay cash for both, and then that property cash flows, I think, at about 4.5% with, as you mentioned, $15 million of Bitcoin at purchase.
How can you pay out dividends when Bitcoin is crashing, which is what we've seen since October?
Oh, because we paid cash for the Bitcoin. We paid cash for the real estate. We have about $3.5 million worth of positive cash flow on the real estate.
Okay.
And we use the dividends from the real estate to actually buy more Bitcoin. So we end up with 2 assets, not 1 asset, and the cash flow.
So, you know, we've been talking about strategy, MicroStrategy formerly. Michael Saylor, who is such a Bitcoin believer, he's coming on the show tomorrow exclusively. Tell Tell me how you feel every time you hear that he is buying Bitcoin as his stock continues to plummet, certainly since, because it tracks, it's a Bitcoin treasury. It holds the most Bitcoin in any publicly traded company.
Yeah. Well, look, I met with Mike a couple of times, actually 5 times before I created our real estate Bitcoin hybrid. He thought that I had too much real estate and not enough Bitcoin. And he thought I should get more aggressive. And I said, yeah, but I'm a real estate guy, Mike. That's really what I am. I'm not seeking the Bitcoin audience. OK, we've had 1,500 investors invest with me. Last year, we raised a couple $100 million for real estate and Bitcoin. And 80% of the people that are investing in my real estate projects don't own Bitcoin. They don't know who Michael Saylor is. They've never read the Bitcoin Standard. And they don't believe that the American dollar is going to be replaced by, cryptocurrencies. They do believe in real estate, and they do believe that money, the technology of money must change.
Okay.
So 80% of our investors don't have a Bitcoin allocation, but they like the real estate, they like the cash flow, they like the write-offs, and they do like the idea that they have exposure to Bitcoin without all the volatility. Tell Mike hello for me tomorrow, by the way.
Let's just say people want to invest in real estate without the Bitcoin piece of it, because there are people who are fraidy cats and they're not interested in it. They don't understand it. You say that there is a way. Start with income-producing property. It'll strengthen the financial position and take action by talking to lenders, touring properties, submit offers. For people who are 45 and older, you recently just said that if all you have saved is $1 million, which, by the way, a lot of people don't even have that, then you're out of luck at the moment. Is it too late? And if not, I'm hoping you say it's not too late. What's the best way to start getting that nest egg to inflate?
Well, it's not too late for anyone. Okay, I started making my first money when I was 52 years old, really. So it's been a long time coming for me and most people, by the way. So I would just tell people that the kind of real estate that we're purchasing today, and I'm a real estate investor first, okay? I'm not a Bitcoin investor first. I'm a real estate investor first that adds Bitcoin as it gives me a hedge to some bigger upside. But I would just tell people today, the biggest correction and opportunity in the marketplace today is not gold, it's not silver, it's not stocks, and it's not Bitcoin. It's multifamily, cash flow positive real estate. It is the best retirement account on planet Earth. It is better than any IRA, any Roth, any 401k. People that are moving into retirement or considering should move self-direct their retirement accounts into cash flow producing real estate. The perfect size is 32 units. If it cash flows with 32 units and it's in a good market and where there's jobs, it's going to become priceless in the future.
Grant, there's so much more we could talk to you about and delve more deeply, but we thank you for your time today. Thank you so much for coming on.
Yeah, thanks a lot, Liz. Appreciate you.
Good to see you.